Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar holds steady just above the 65-cent handle at the start of the week, struggling off weaker Chinese PMI that signalled contraction across both manufacturing and services. The Aussie still remains supported mainly by a softer US dollar, with markets now pricing in over 80% of a chance of a Fed cut when they meet on the 9th, 10th of December. Meanwhile, hotter Australian CPI keeps the RBA firmly hawkish, with the risk of another hike possibly instead of a cut, or an extended pause. Either way diminishes any cut in the near term. Traders now turn to this Wednesday's Q3 GDP and incoming US data for direction, including the Fed's preferred inflation gauge, the core PCE. Later today, Fed Powell also speaks at the Stanford University with audience questions expected. So as we can see that the market is still somewhat overbought, but getting closer to that topside target around 66 cents, where previously supply returned and knocked the Aussie lower. Nevertheless, I still feel with that trend holding, could see tests continuing to the top side until there is some turn in the trend. Turning to the euro dollar, it holds firmly as it heads towards the key level of 117. I do feel that after the 6-day climb, profit taking may emerge from that level of 117, but from the technical point, I still feel the bulls are in control. Dollar yen is weak after now beneath the rising wedge, which broke first of all as resistance and then support, and now looks firmly towards the next target, which is around 155.45, and maybe a break there could give further weaker play, that is down towards the lows of 154. I like the pattern, and especially on a broader case from the weeklies as well is breaking down, so let's see if this pattern does continue. Moving on to sterling, a whipsaw price action, and a little bit disappointing that the technicals have buckled somewhat. But nevertheless, the top side target 133 still holds, and then he pulled back to be shallow. Turning to commodities, gold posted a 6-week high on Monday as a softer US dollar still continues to play in view of the 25 basis point rate cut this month from the US, expected that is. If so, the further gains are looking back towards this top side area around 4,350.60. That may even progress on to 4,500. The bull trend is in play, and let's see if it carries on in this manner. Turning to oil, is pressurizing this next level, which is seen around 59.60-70, and a break there could give further scope on towards 62.5, which is my preferred target. The ADX is bullish, and also the technicals have firmed up, so let's see if we can get that break. Well, that's a wrap. Thank you for joining me. As always, look after the intraday report, and I hope you enjoy the great start to the day.